Hello and welcome to this week's episode of The Capitalist Investor. As always, you got your boy Diamond Hands D. You got our boy Cool Hand Luke.
Yo, yo, yo.
And Tony the Tiger is back.
I'm back.
Is that the name, Tiger?
That's what we're rolling with.
Tony.
When Derek and I were doing a couple months ago.
Is that the Frosted Flakes guy?
Yeah.
Tiger?
It can be.
Tony the Tiger is actually the voice of the Grinch. It's a fun fact. There you go.
Well, we did just get past Christmas.
Yeah, absolutely.
Now we're heading to the new year.
Yep. So we're thinking today, to kick off the new year. We're recording it a week before, as always, but wanted to kind of go through some predictions and see how they shake out for 2022. So Mark, obviously not here today, but I'm sure we'll be back next week. I'm pretty sure I lost the over-under that we set last year. I'll have to go back and check my notes. I think it's a reminder is going to pop up in about a week. But we went over-under for return on the S&P 500. I believe it was 9%. I took the under and lost. So, but if you remember, at the beginning of 2021, things were not looking so hot. But that's a pretty good segue because we want to go through, a couple segments of, the market and kind of what we see as far as returns. And I think that's a pretty good segue into, getting your opinions on what we think the S&P 500 is going to do in 2022. Because, like I said, there was kind of low expectations to start 2021, and the S&P has ripped, 29% so far. There's a couple more days left. So, I think probably the most interesting conversation is, well, how many more years is the market just going to continue to blow up like this?
Yeah, I mean, the past 3 years, it's been between 20% essentially and 30% gains on the S&P. So we've gotten spoiled.
Yeah,
like,
absolutely.
Everyone is so spoiled right now that if they don't get 20 to 30% returns, they think the world's crashing down. So I think we got to get more realistic in 2022. I think you mentioned back the beginning of last year, things weren't looking so hot, right? So the market's a discounting mechanism for the future. When things aren't looking so good, that means most likely things are probably heading up in the future, right? So I think that's why we saw a lot of pull forward in gains over the past couple years. And now that things are looking good, what's more likely to happen? Things to look even better from here, or things to get worse again in some sort of way? Because we see inflation issues, we see all these other things. I think it's very possible we see high single digits the next couple years.
Okay, that's very bullish. I know that the Fed is preparing to take away the punch bowl from the party. I don't, it's. I don't know. I would assume that's going to have an effect on the market. I don't know how much, but I think a lot of people get confused. They're like, "Hey, they're tapering." I mean, if you're going 100 miles an hour and you go to 90, you're still speeding. Yeah. I'll use that as an analogy, but that's what they're going to be doing. They're ramping it down. They're not turning it off, right? So I think there is still going to be liquidity out there. I think there's going to be a lot more volatility out there. I think Omicron has kind of put a little bit of fear. I know that the symptoms are mild and stuff, but everyone I feel is getting it.
Yeah.
It's very contagious. And one headline could put us on a lockdown for a couple weeks. I'm worried about something like that. If this thing mutates into something else in early spring or summer or something, we've had the Delta, we have Omicron, what's the next one?
Yeah.
And how severe is it going to be?
Well, I think the year of 2022 is going to be the year fundamentals start to matter again.
Yeah.
They haven't really mattered the past year and a half. We just kind of bought stocks, and then no one really cared. They just bought the dip. I think 2022. Let's look back to 2021. It was the easiest comps we've ever had. People didn't know how the earnings would be for all these companies in the S&P 500. So earnings estimates were so low.
Right.
So we blew past these estimates. Now earnings estimates are much higher for 2022. Right. So it's not as hard and not as easy to get over those estimates. And that's why I don't think that's the main reason I don't think we're going to see the 20-30% returns. I still think that the overall economy is still recovering. There's too much money out there. I think we'll still see that, like I said, mid to high single-digit returns. But it's not going to be easy like throwing money at the wall like we were able to.
Yeah, I mean, when you were beating estimates by 20, 30, 50, 100%, yeah, the stock's going to move.
Yeah.
The market's going to move. When it's normalized, like you mentioned, then what? You know, it's a disappointment because you beat by 8 to 10%.
Yeah.
Like, I remember a few years ago, people were chomping at the bit like, oh, my gosh, that's amazing.
Yeah,
Like,
absolutely.
We're moving.
Yep.
Yeah, that's a good point, Luke. You know, I think hopefully, I keep saying this, hopefully the 2022 is the year of the unwind, right? We as a country have been doing essentially everything that we could possibly do to keep everything afloat, keep the market propped up, keep the economy propped up, really it's approaching 2 years now. So, honestly, I'm just sick of talking about COVID, so I'm not going to talk about it too much more. But it appears to be good news. Now, I think everyone needs to let everyone else know that it's good news, but it appears to be very good news.
The one thing I will say is, and this comes up a lot in the market, the saying, buy the rumor, sell the news. You know, the rumor is, like you were saying, that Omicron, this is a good thing, right? It's more contagious. It's not as deadly, which is where we want the COVID to go, to become more like the common cold. I think it's very possible, especially when the S&P is made up by 8 stocks, essentially, that makes up 30% of the S&P, that we have some sort of buy the rumor, sell the news event in 2022, to where things are we get all kinds of bullish news, let's say, at the beginning of 2022, and we see the stock market sell off. We've seen the market be opposite almost. Like, when things were looking bad, the stock market does good. When things are looking good, the stock market does bad. So I think it's very possible that the beginning of 2022 could be a little rough.
Yep.
I mean, I'm just thinking of like what you just said, and Apple comes to my mind is because they had they said that their iPhone sales are diminishing. You know, they're not expecting to sell 10% more. They're expecting to sell less than expected.
Mm-hmm.
Yet the stock went up.
Yeah.
And it continues to go up. So like you mentioned, like the index is being propped up by about 6 to 8 names.
Yep.
And everything underneath that, the rest of the 95% of the names are not doing well.
The past month, these small mid-cap names are down 50%, but the market's at all-time highs.
Yeah.
Why can't the opposite happen? And me and Dee talked about this a couple weeks ago. Why can't the opposite happen to where the market sells off 5% and then these small mid-caps go up 20%?
You would think we'd be long overdue for that.
That's what I'm saying. Why couldn't there be a rotation out of these big mega-cap tech names when things are looking good? Because the big mega-cap tech names have been kind of the safe haven of stocks. So when things are looking good, they're going to rotate out of those stocks into some of the more aggressive growth stocks, like small mid-cap stocks. And then the market sells off 5 or 10%. Everyone freaks out. But then these small mid-cap stocks do well. Yeah. That's a very possible scenario.
But the reason they were propped up is because of future earnings potential.
Right.
And, if what did you say? Something's going to matter. I forget what you said.
Fundamentals.
Fundamentals are going to matter. Well, a fundamental for a small and mid-cap company are just, they're not there the mega-cap names that you're talking about.
That's
right?
true. Good. That's a valid point. I don't want to focus just on stocks here. I think there's a couple other sectors we should kind of talk about as well, right?
Yeah. Well, so before we do that, let's make our prediction for the S&P 500 in 2022.
I'm going to say 8.5%.
I was going to go 7, but a very volatile 7.
I like it.
All right, so I want to go ahead. I have an idea too.
All right. So I think Luke's exactly right. I think we're in for a rough first quarter. I think everything when you just take a step back and look at it, we're going to be hopefully. I think everyone's getting to the point where we realize that we can't just sit in our houses and hide from Corona forever. You're going to catch it eventually. I feel like I've been saying that since 2020. But when everyone realizes that seems to be good news. I think Luke's exactly right. I think the opposite is going to happen. So I'm going to go with a more modest 6% return. And I think it's going to be a rough first quarter, and I think we need that, honestly. And we talked about it, I think 2 weeks ago with Mark. You know, there needs to be a pullback to kind of restore a little bit of order and get some more money into those small and mid cap names.
So here's my question then. If we're all in consensus mid single digits, mid to high single digits, will we have a bear market in 2022?
So you're talking about negative 20%?
Where we're down 20% and then shoot back up 30%.
I think 10% is very likely.
Okay. So
not 20.
More of a correction.
More of a correction.
Okay. 'Cause I don't know the last time we had a correction.
Right.
I mean,
it's been since COVID.
Right. I think that's it. I think the worst we've done in 2021 is -4 and about 4%.
Yeah, insane.
It's the smallest dip. So, all right. Okay. So you think we'll have a correction? I'm thinking we're going to have somewhere like a 15% correction, because once we hit 10, I think FOMO is going to hit. And people are going to panic because they haven't seen that in years.
We should rename Tony, not Tony the Tiger, Tony the Bear.
There we go. I'm trying to be real.
I know, I got you. I'm just messing.
Yep. So I will. Yeah, I think it'll be. Yes, I think it'll be somewhere between a -10 and a -20. I don't think we'll actually get to the 20.
Yeah.
So yeah, I'll say correction, and I'll say in the first quarter.
I'm looking forward to coming back a year from now and listening to this episode.
Yep.
All right.
So yeah, go ahead, Luke. Let's talk about a few other areas of the markets.
Let's talk about, bonds are boring. I don't want to be too talking too much about this.
Yeah.
I think bonds are going to be negative. Just talk about that real quick, just because of the hawkish Fed and inflation being so bad. They're going to have to combat it. So I think bonds returned this year -3%. If you take a look at the AGG, which is the aggregate bond index, I think we're going to be right around that number probably in 2022.
It'll be flat. Yeah,
Yep.
I agree.
Yeah, for sure. I think. It's a very, very important point for the kind of the seismic shift that we've seen in how you build portfolios. Luke's real young, but even when Tony and I got into this business, it was 60-40 all the way. And the 40 propped up a lot of portfolios for a long time too, especially coming out of the 2008 correction. We could buy double line and get a 8% return in our sleep, and those days are over. So I've
never been able to get 8% on anything. Risk free.
Yeah, well, but that's why the alternative sleeve is going to be important on a going forward basis.
Absolutely.
So, like you said, bonds are going to stink. Let's move on.
Yeah, that's what I'm going to say. I don't want to focus too much on bonds. No one likes talking about bonds.
But let's talk about some of the alternatives that we can see for next year.
Real estate. I'll hit on that first.
With interest rates rising, I would assume real estate will cool off, but 3.5% interest rate or mortgage rate, refinance rate, whatever you want to call it, is still a good rate.
Yeah.
So I do feel that it's going to cool off, but it's not going to. It's still going to be a hot market. You're still going to have a hard time. You're still going to overpay for a house, but it's not going to go up 50% like it did this year.
Just to give the listeners some background, if you take a look at the Vanguard real estate ETF, it's up 40% this year. So I mean that number's insane, right? Typically we see 4 or 5% maybe real estate gaining every single year. We saw 40% in 1 year. Like that is crazy. I mean, I know mortgage bankers and loan officers are making tons of money. They are the best year they've ever had in their life.
The mortgage refi business is booming.
Yeah.
Right. Yeah. But I'm also a firm believer in mean reversion.
Yes.
If we've been used to 3, 4, 5, 6% rates of return, and then all of a sudden we get a 40.
Yep.
Where do you think we're going next?
You're taking my lingo, Tony. I mean, we're an engineer, but I mean, I'm a math guy. I like that mean reversion.
Yeah.
The nerd's coming out of me. But no, I agree, man. I think. What? I mean, I'm going to throw out a number. I think we could see probably 10%.
I think with interest rates still low and continue to be low, I do believe that that sounds like a good number to me.
Yeah.
You know, it's a lot of this stuff boils down to basic human psychology, right? The pandemic starts. You have to stay at home. What does everyone do? Get a new home or upgrade their current home, right?
Now, I know you can't trust Zillow. We talked about that in the past episode too, how their Zillow's estimate was completely fraudulent essentially, and they had to get rid of half of their business,
right?
Because they didn't make any money. But if you take a look at the Zillow I just bought a house, I think 8 months ago. And if you take a look at this estimate, technically it says it's up like 15% in like 6-7 months. Like if that's true, that's great. But the problem is, how true are the numbers to rely on, right? And I think a lot of people kind of misconceive, what they could really get for their house.
Yeah,
right now.
I mean that's a paper gain.
Yeah,
that is not a real.
Right.
You didn't sell your house,
right?
So you got to actually.
And that's the problem. Like these numbers, like when you take a look at real estate, up 40% the past year. It's different for every single area. Like it's not the same for New York City. Like for example, right? New York City is still kind of dead. The real estate market's not really popping there,
right?
Because no one wants to live there. When you have vaccine, we're not going to get into that, but all that stuff. So I mean, it's just something to think about. But I think, like you said, mean reversion. I think that's the key for real estate. I like that word. I think that's what's going to happen.
Yep. So I completely agree. I agree with Tony. Between a 3% interest rate and a 3.5% interest rate, I know we're dealing with large numbers and that will turn a few people off, but it doesn't seem like that big of a deal compared to the actual prices of the real estate. So, but everyone still wants it. I don't see it, crashing down to, 2018 levels or anything like that. But I would say low double digits. So I'll go 14.2%.
That's very specific. 14.2, not 14, not 15. 14.2.
All right. Everyone's favorite topic. How about Bitcoin?
I love this.
So Bitcoin is up 62% year to date, 2021. So I'm sure that'll change before the end of the year because it's a wild ride.
And it gave away 20% in the month of December, I believe.
It was up like 120% on the year at the peak or something like that.
At the peak, yeah. But I think in December alone, I mean, it went from 60 to 50. Yep. So, I mean, it's somewhere around 20% loss for the month, and it's still trying to find a home.
Well, it's sitting at like 46 or 47 right now as we speak.
Yep.
Now, that being said, with the volatility of Bitcoin, by the time this episode comes out, or by the end of the year happens a couple of days from now, that could be plus or minus 10% or 15%, right? I think Bitcoin is going to start to become known more as that inflation hedge in 2022, just because there is a limited supply. But it is a risk off or on asset class. So that means when the market's up, the Bitcoin's probably going to be up a lot more. If the market's down, it's going to be down a lot more, right? So it kind of tracks what the market does. If I think the market's going to be up 8.5% next year, I think Bitcoin's going to be up, let's say 15 to 20%.
All right, so 10 to 15% next year?
15 to 20, yeah.
15 to 20, so we're getting back to like 60.
About 60. Well, I think next year could be a 60, 70,000 year. My thesis is over the next 10 years, it could see annualized 20%, roughly. It could triple, double, or quadruple. Possibly, I think the max could be worth about $500 billion or $500 million. Geez, I'm throwing out these numbers. $500,000 a coin. So $500,000 is kind of my thesis over the next 10 years at some point.
Yeah.
So when you do the math there, it's like 25, 30% annualized. But I think next year probably be like a 20% year.
Okay. All right, go ahead, DM.
So, there's just so many coins out there right now. So many. You can't even keep track. Do you think there's a phenomenon going on where, people are selling their Bitcoin for big profits and buying the other coins? Ethereum comes to mind. That's big in the NFT game. We'll talk about that. But, I think that kind of factors into things too.
I think it comes down to utility. Mm-hmm. So, I mean, it's very difficult to use your Bitcoin. And, it's becoming a little bit more mainstream. But I still feel that if I went for lunch and I started walking in downtown Cleveland and asking people about their Bitcoin portfolio, they'd be like, "Bit who? Like what? I have some. I don't know how to spend it."
Right.
You know, those type of things. However, I do believe like Ethereum, for example, is going to. They seem to move in correspondence with each other.
Sure.
When Bitcoin's up or Ethereum's up, and vice versa, right? When Bitcoin's down. However, I think there's going to be something. I'm kind of bullish on Ethereum because it is how you trade NFTs. And again, there's a very small niche of people use this, but NFTs are really worth. People are paying thousands and hundreds and millions of dollars, you name it, for JPEGs. Let's call it what it is, right? But it's a different form of art. It's there's a lot of money flowing into it, and they're bought in Ethereum, right? And that type of blockchain technology. And I feel that Coinbase is going to get into the NFT game, and I feel that Coinbase is like the gatekeeper to buying your portfolio and your crypto portfolio, crypto wallet, right? I feel that when they turn on the lights for NFTs, the Twitter things that I read saying it's going to really be a mass flood of people buying into NFTs.
Yep.
So again, it's a very
So you think
very early in the game for NFTs. I'm still trying to figure it out.
So you think Ethereum's going to outperform Bitcoin next year?
I do.
Nice.
I think
it's
what I was
very
getting
possible.
to,
Yeah.
and I think it has, and it's more of around the utility for buying NFTs.
Mm-hmm.
So that is an extremely interesting take, and it totally makes sense too, right? Because I don't know how many individuals out there own Bitcoin, but I would wager a large amount of them, myself is definitely included in this, only bought Bitcoin because they didn't want to miss out, right? It's the fear of missing out. I still don't fully understand why you need a Bitcoin. Like, I understand the theory behind it. We can get rid of central banks and there's no more bankers making money and there's no more governments. I get all of that. But why does that make Bitcoin worth, $48,000 a coin right now? That is the thing that I have never been able I still have not been able to reconcile that in my mind.
So it's like I have to take my Bitcoin, convert it back to US dollars to spend it.
Exactly.
However, so now here's one other thing. The one reason I got into NFTs in the crypto kind of mentality is because Visa did. And they are embracing it. Mm-hmm. And I feel that you are going to be able to pay your bills because they're going to make it easy. Like, hey, if you have a crypto wallet, you can pay your debt off, your Visa debt off by using crypto. Mm-hmm. I don't think they've gotten there yet, but they're buying NFTs as part of their assets, their portfolios. They're embracing it, and they know that people are liquid in crypto, mm-hmm. whether it's Ethereum or Bitcoin. And I think these debt collectors like Visa are going to be the first people to really interact it because they're really involved in it, mm-hmm. and they're trying to make the system get there. So maybe we are a couple years away. It just moves so fast. I think Visa is like kind of a major player to be on the forefront of utilizing crypto to pay your bills.
Right.
Yeah.
And that's a big deal.
Well, what about the metaverse? Like, we can talk about how NFTs play in the metaverse, and so how to crypto play in the metaverse. That's just another growth area. We don't have to talk about that. I'm just saying that's something
people
to
are
consider.
like, I like playing. I just heard it today. Somebody was saying on CNBC, like, I like playing real golf.
Yeah.
I'm not going to play golf in the metaverse. And I'm
right.
like, I think people are losing the idea. Like, when you go home and it's 7, 8, or 9 o'clock at night, you're watching Netflix, you're watching TV. Mm-hmm. People are going to go into these chat rooms, but you're going to be able to see people. I think that is how the utility is going to be for the metaverse. It's going to be getting on Discord or Twitter or something, but now you're just putting on you're in there in a room like this, but you're sitting in your living room. I think that's going to be the utility behind it.
So what's your number then for Ethereum and for NFTs over the next year?
So Ethereum's somewhere around like $3,700 a coin or whatever. I do feel that I think somewhere around 42 to 44 a coin. So I believe it's going to be more around 20% for Ethereum, where Bitcoin's going to be a little bit more behind, around high single digits for next year. Maybe crest into that $60 a coin.
Yep.
That's my theory.
I'm with you, but I'm even more bullish. I'm going to say it's going to double up. So what is that?
7,400.
Yep. So that doubling up in 2022 Ethereum. Heard it here first.
Really?
That's the bull in the room. Wow. I like it. The optimist.
Why do you think it's going to double?
Because just what I said, the NFT game it's clunky. It's like the Wild West out there. No one really knows what's going on. If you're not doing it 24/7, you're behind. That I think that's going to change. It's going to get better. You mentioned the additional services for holding your NFTs. That's a big problem right now. MetaMask is, just not that great, not easy to use. As it becomes more user friendly, more people are going to get into it.
Yeah.
I'm going to take the other side of the trade when it comes to NFTs. So you guys were talking about NFTs, I think, before we even came in here to do the podcast. I think that NFTs are very similar to how when crypto started, you saw 90% drawdowns, very common in crypto when they first started out. So every 2 years, Bitcoin dropped 90% in cycles. So NFTs are brand new, essentially. They've been around for a year and a half, 2 years. They've been around probably longer than that.
But
they've only been around since the Ethereum blockchain essentially has been around, right? I mean, Ethereum's pretty old, but they've only really gained interest the past year. So I think we're kind of at the top, close to the top for the cycle. I'm not saying top for the long term. So when we come back a year from now, I don't know necessarily the number, but I think you might be down a little bit on some of your NFTs that you own. So that's just my take. You know what I mean? Yeah. I don't know if it's true or not, but you might be able to ride the wave for another 4, 5, 6 months. But I think by the end of the next year, you might see a little bit of a drawdown.
So take some chips off the table if you own some NFTs.
Hey, if you're up on some profits, if you have profits, it's never a bad idea to take some chips off the table.
The only reason I'll get behind what Dee said about Ethereum, though, is I think if you line up, if you look at the volume traded for Bitcoin and all other coins, I feel 70% goes towards Bitcoin, 20% to Ethereum, and 10% to everything else. Yeah. I think it's going to get spread out a little bit, and that's why I could see a higher bump in some of the Ethereum and some of the other coins. And those gains are going, the pop in those other coins is going to come from Bitcoin. So Bitcoin could sell off a little bit more as people diversify their crypto portfolio.
Yep. Yeah, we're right at we're at the very beginning, right? It's kind of just like the best analogy I've heard. It's like the beginning of the internet, right? So there's thousands of websites out there, right? And most of them failed.
Yeah.
Yeah. My favorite one is here. Luke, do you know how Mark Cuban got all of his money?
I remember reading about it, but I don't remember the website that he built.
So he sold broadcast.com to Yahoo for, I don't know the exact number, but it was $7 billion, something like that. And it's completely worthless now.
Yeah. No, absolutely.
You can go in and type broadcast.com into your browser and it goes to Yahoo. So Yahoo bought it, and Yahoo is now worth way less than what they paid for broadcast.com.
Gotcha.
Yep, exactly.
Yeah, no, absolutely.
So you're going to see lots and lots and lots of those. So that is my main trepidation for putting big money into that space. Yeah. Big money for me at least. But there's going to be home run projects in there too. There's going to be the Amazons of the world and the Googles that dominate.
Well, like I said, I think I compare it to Bitcoin back in 2010, 2011, right? If you would have bought it back then, any point, even at the peak, and you held it to now, you'd be fine.
Right.
But, NFTs, a couple $1 billion have been transacted this year, I think. That's a lot of money. 10 years down the road, that could be $200 billion. You know what I mean? So it could be a lot bigger if it becomes what it could become.
Yeah, I think let's move on from the thing, but like the Bored Apes, that is a very popular NFT. They call it the ecosystem on Twitter. Their ecosystem is like $3 billion. If you start adding up like what they're worth and all the stuff that they have going on.
It's like its market cap.
Exactly. It's like a $3 billion. It's insane.
Yeah.
And it's like 17,000 JPEGs, right? It's 10,000 apes.
There's like 10,000 apes, and there's some mutants, and
right.
then there's like dogs, and I don't know. It sounds so silly, but there was one that sold literally yesterday for $3.5 million. It's a different form of art. It's an alternative. I don't know how else to describe it.
Sure.
A different form of money laundering.
Yeah. That's a whole nother topic.
Any other alternatives that you guys can think of? I think those are the main ones. I mean, you have private real estate. You got some things like that.
What about gold?
Yeah, I think gold is a good one to finish off with, because it's just been kind of kicked around for a while now. It's down 7% on the year. I like gold next year because I think it's going to be a bumpy ride, and I don't think people are comfortable buying Bitcoin as inflation and downside hedge. So yeah, I like a comeback year for gold in 2022. We'll call it positive 10%.
I'm gonna go a little lower than the market, but I think it's positive. I'm gonna go about 5%.
Yeah, I like the 10% number. I do agree with that. I think it is a calamity hedge. Ultimately, when people start getting scared and they're sitting in capital, I'm just going to hold gold.
Yep.
Right? Yep. And I think we're going to be a little bit more volatile than we've been, in 2022 than we have in the past.
Yeah, but do you know what's going to happen in 2022?
What?
Elon Musk is going to go up to an asteroid and mine gold off the asteroids. So therefore, there's an infinite supply. No, I'm just kidding. But
the movie Avatar,
that's one of the thesis.
Avatar is not that far off from being reality.
It's not.
If this metaverse stuff starts, it's crazy. It could be.
Yeah. No, that's actually one of the bear theses I've heard of gold, because we're going to go up to other planets and asteroids and mine the gold, so that we don't. Since there's an infinite supply of gold, that gold's worthless, essentially.
Who's coming to our planet to mine our gold?
Yeah, right. Well, if you watch enough Ancient Aliens,
I was just going to say that.
which I actually have been the past week, so I've been in the conspiracy theory kind of mood recently. But,
best meme I've ever seen is that crazy guy on the History Channel. He's like, I'm not
Extraterrestrials.
saying it was aliens, but it was aliens.
Well, that was a fun one, guys.
Yeah.
Like I said, I'm looking forward to coming back here a year from now and seeing how close everything is, because as we all know, we don't have a crystal ball. It'd be nice, but we can use data, all this stuff we have, to try to leverage our resources. But
Absolutely. All right, well, I think that'll do it for this week's episode of The Capitalist Investors. So thanks to everyone for tuning in, and here's to a great 2022. We'll see you next time.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.